Good afternoon. I am Sensei Kevlar. Welcome to the Way of the Trader. In the last Dojo lesson, we talked about how to create profit opportunities for ourselves when the market comes down. What I implored you to do is come in here with your drawing tools and find your support and resistance lines. Come in here, find your resistance, find your support. Draw those lines until you can see them when you're absolutely not paying any attention at all. They just pop out at you automatically. There they are right there, coming in right here. Okay. Then what we do is when the market is coming down, we double up. We double up, we double up. Or we triple up, or we quadruple up. In this way, we dollar cost average down our position. We create our opportunities for ourselves on the downside. And the reason that we do this is that these markets go down all the time. And you can't be sure which way they're going to go down. The only thing that you can be sure of is that they are going to go down. Okay? Take a look at this right here. This is PivX. And what I did is I found my support and resistance lines. Here they are right here. Here's a very obvious resistance line right here. And then we came up here and we smacked into this. Well, previously, this had been our historical support and resistance line. We had drawn this line back here in the past. And then if we were prepared, when we were up here, if we were prepared to, if we had put our order into the market right here, if we had put our order into the market right here, if we had initially been at this line right here with our profit, and then we bought again here, and we doubled up, that would have brought our profit line to here. If we then doubled up on this line right here, that would have brought our profit line to here, would have halved it each time. If we had tripled up instead, it would have brought it here, and then here appropriately. If we had quadrupled up, it would have brought it here, and then here, and you would have made even more money, but you would have been heavier allocated at the bottom here. But look at what would have happened to you. Look how much profit opportunity you could have generated for yourself. So that's the strategy for what happens when we're going down. We 2x, we 3x, we 4x. You should be able to do this in your sleep by now. You should be able to look at this and say, oh look, this is where I'm going to 2x, this is where I'm going to 3x, this is where I'm going to make my money on the upside. Okay? Well, what about that upside? Let's talk about that upside for just 1 second here. One opportunity that we can do is when we come down here, well, we could just, as soon as we come back up to right here, we could sell. Take our profits, walk away. Go look for another opportunity to make our money in. Wait for a return to here. Or, alternatively, wait for it to come up to here. Look at what it did. It came up to here. Could we have waited for it to come back down to here and then bought again? And then set up our whole plan again? Look at how the plan sets up for us. When we plan this upside potential, we can take the money here, wait for this motion right here, and then see this downside potential right here. As soon as we come up to here, we can put in our order right down here. Look at what happens. The market comes down, gives us this order. Maybe we got to move it up just a little bit in order to get that order filled. But what we do is we get one position right here. And we prepare for the opportunity generation when it comes down and down and down. Meanwhile, you come up right here. Okay? Well, that's one opportunity, certainly. And it's a 31% opportunity. Well, if you're making 31% on 0.001 Bitcoin, and you're doing this on, a daily basis, you're going to be making a lot of money. That's the truth. It's about time in the market, not timing the market. You're not trying to sit here and decide that it's going to go up on you. You're trying to sit here and decide that if it does go up, I have a plan for profitability, and I'm going to take my profits and execute, and I'm going to go make my make my money in another market and wait for it to come back down. And look at what happens when it comes back down. Could I have bought back in right here and taken it up to here and made 31% again? Could I have done this in the span of 2 weeks? Sure. Well, if I did this in this market and I did it, twice in 2 weeks, what if I was doing it in 14 other markets and I was doing it every single day in those other markets? What I'm saying is that if I'm doing that, I'm going to need the allocation, the portfolio allocation, to be in 14 other markets in order to make my 35% a day on a portion of my portfolio. You got to think in percentages. Do the math on the percentages. If you are allocating a large amount of your buying opportunity up here, well, when it sinks away on you, number one, you've lost a lot of buying power and you have to double up, triple up more. And what that's doing is that's taking away from your other opportunity generation potential. That's all you've done. Everybody says, well, what if I have a bigger portfolio? Can I start with a bigger opportunity up here? And I go, no, if you got a bigger portfolio, well, you just need to hit the ground harder. You need to go find more opportunities for yourself to layer into with this small position size so that you can allocate more opportunities across the board as they come down on you. Being disciplined to a plan means having a plan for profitability no matter which way the market goes. It doesn't mean taking bigger risks at the top of the market or what you think is the bottom of the market. Even if it does do this on you the next day, you couldn't be sure that the whole thing wasn't going to come down and do this on you. So let's talk more about what opportunities we can create for ourselves on this upside potential right here. Being disciplined to the plan, let's say that we started up here, the market came up, we found our resistance line. That's a resistance line, so we're going to make it red like the other ones. The market came up and we found our resistance line, and then it came down. And so we bought right here. Looks like a fair place to buy right here. We went up and we took profits. We came down and we bought in. We came up and we took profits. We came down and we bought in. We prepared for this leg of the journey right here. We prepared for this motion right here. And instead we got this right here. Well, now we're 2 positions deep, 3 positions deep, 4 positions deep, depending upon if you're 2xing, 3xing, 4xing down, according to the plan. Well, one opportunity is to come up here and sell everything. But another opportunity is to treat the multiplier on the downside as the divider on the upside. If we were doubling up here, well, we could have up here, we could sell half our positions. And we could sell the other half up here. Okay? This is the multiplier coming down. This is the divider coming up. How many do we buy? How many do we sell? We could create more upside potential for ourselves by remaining disciplined to a plan that has us only selling out a portion of our position on the upside. What this does is if we get down here and we're only one position, then we're only going to sell one position. But if we get down here and we're 4 positions, well, we might sell 3 positions here and 1 position here. It's the divider. We're doing the opposite in reverse. If we are going 4x, if we're doing 2x here, we would sell half here and the other half here. Okay? Well, let's say that we go 2x and then 2x and then 2x. Okay? Well, we could sell half our positions here and then half our positions here and then 1 position here, which is what we bought in the beginning. Because that's what we'd be down to. Because here, here we would be at 4 positions, so here we could sell 2 positions, and then 1 position, and then 1 position. Okay? Being disciplined to a strategy going down also allows us the opportunity to be disciplined to a strategy going up. Now, let's take a step back and look at this market for 1 second. In fact, let's come back to BTC USDT. And let's take a closer look at the opportunities that we have when the market goes down and then it goes up again. Because we just said something very important. If we bought so much going down, then we would sell so much going up. Well, this is one strategy, and it certainly could work in our favor. And it doesn't have to be symmetrical. It doesn't have to be the case that if we 4x going down, then we 4x going up. We can 2x going down and then start selling out really slow by 4xing by 4 dividing going up. We could 2x going, we could 4x going down and then sell out really fast by 2x dividing up. This would have us doing a lot of buying all the way down. I'm sorry, a little bit of buying all the way down and get into a really heavy position. And then as we sold out half of our positions, then half our positions, and half our positions, we'd very quickly get rid of these positions right around here. So by modifying the strategy, by modifying the way in which we become disciplined to the plan of multiplying when we're going down and dividing when we're going up, we can go ahead and make these plans ahead of time and see exactly what levels we're going to buy and sell at, and we can go and put our orders into the market appropriately according to the plan. Now, if we are in a situation where this market is very volatile, and we believe that this market really does have a lower baseline here, which I'm trying to find as I pull in more historical information and find more historically correlated resistance and support points. I think we've got basically the majority of the important ones being called out here. Well, look at what's happened here. We've got some real nice even distribution across these things. We certainly could make ourselves more profitable by, 2xing, 3xing, 4xing up and taking more risk on. But let's look at another opportunity we might create for ourselves here. If we believe that this really is the top of the market, and we believe that this really is the bottom of the market, we might say that this is about the middle of the market. We'll say it's 3,500 right here. So we're going to color this line a little bit differently right here. We're going to say that this is, we'll not do that. We'll say that this is our market middle, okay? Everything above here is above the market middle. Oops. Not trying to get too rainbow bright on you. Everything above here is above the market middle, and everything below it is below the market middle. Okay, so we've got this nice gradation that we can see right here. Well, what if instead of thinking about, what if we had a really big position in Bitcoin already, and we wanted to take advantage of the fact that these markets move around a lot? They do a lot of this volatility right here. We could apply the strategy, certainly, if we had some dollars and Bitcoin went down on us. We could start buying 1 position, 2 positions, 4 positions, 8 positions, 16, 32, 64, 128, and then selling it out. Okay? But most of us were coming to the table and we're already in Bitcoin. We don't have a bunch of dollars that we're trying to put into the exchange. We have a bunch of Bitcoin and we're trying to make money with it, leveraging it into other markets. But look at how much opportunity this market has for us right here. while we're sitting here holding on to our Bitcoin. 28% right there in just a couple of days, matter of weeks. Well, we're holding on to Bitcoin, we're holding on to Ether, we're holding on to, whatever it is that we're holding on to, because holding is a good strategy long term, and we believe in getting more assets long term to hold on to. That's the whole reason we're doing this at all. So if we're going to do that, instead of just sitting here and holding on to everything as it sits here and moves up and down and, here it's losing us buying power, and here it's creating buying power for us. What if instead we were able to take advantage of these motions in the market using exactly the same strategy that I've already taught you? Let's assume for 1 minute that we're right here at our market middle. Let's assume that the market has just done this motion right here, and it's come down to right here. I'm just going to draw that in as a set of phantom ghost feed right here. Okay. Now we are at our market middle. And what we're saying is that we want to be able to take advantage of either market direction. If the market goes up, we want to take advantage of it. If the market goes down, we want to take advantage of it. We want to do, in this case, we want to do profit taking. In this case, we want to do opportunity generation as per the strategy, as per remaining disciplined to our plan. In order to do that, we would need to have an equal amount of Bitcoins and US dollars when we are here in the market. So what we're going to do is we're going to label that our 50-50 line. We're going to say that is our 50% BTC versus 50% USD. T. By selling out our half of our position to US dollar Tether, we have the following opportunity. If the market comes down on us, we could buy one position because we have US dollars to work with to buy one position of Bitcoin. If the market goes down further on us, we could double up, triple up, quadruple up. If the market goes further on us, we could double up, triple up, quadruple up on that position. We could keep on taking advantage of this all the way down the market. Okay? Likewise, as per the strategy, when the market turns back around on us, these things which were multipliers coming down become dividers going up. If we have down here 20 positions, we could come up to here and sell 10 positions. We could then come up to here and sell 5 positions. We could then come up to here and sell 2.5 positions. At this point, we would have taken profit every opportunity that the market gave us. If we come down here, and then we can take advantage of this opportunity generation right here. However we think the market's going to go, we can take advantage of it and then prepare for what happens when that doesn't occur. Maybe it does that instead. Well, look at what happened. We have an opportunity. We have the money to do this because we scheduled how much we were going to spend at each resistance point, or at each support point. Okay? Now, let's look at what happens if instead of going down, as I have predicted it to do, instead we get a nice bounce like this one right here. The market comes right on down into our 50-50 right here, and then goes up. Well, here we bought one position because we had US dollars to work with. Here, we're going to do exactly the same thing, except in reverse. We are going to sell one position because we have BTC to work with. Remember that our allocation at this point was 50% Bitcoin, 50% dollars. Rather than holding 100% Bitcoin, I'm going to sell out half my position, and I'm going to set myself up with dollars for buying down the market and then selling at a profit. I'm also going to set myself up with Bitcoin for if the market goes up, I'm going to sell one position. If I sell one position at 3,806 or $3,806, and then the market comes back down, well, then I can buy one position back at $3,500. That's a difference of $300 on one position. That's 8%, 7% in this market. This market does this all the time. Here's the strategy being repeated again, except instead of going down, we're going up. What happens if we go up more? Well, we still have more Bitcoin. We can just sell one position, two position, three position. Double up, triple up, quadruple up on our selling. Here, we were doubling up, tripling up, quadrupling up on our buying. Here, we're doubling up, tripling up, quadrupling up on our selling. If it comes up here we sold one position, two position, four position, 8 position. Market goes up to here. Finally, the market turns back around. Well, per the original strategy, we could just buy back the 8 positions because our profit line got moved when we did, where the whole time dragging the thing upward in exactly the same way. Let's bring our profit line in here. Okay. If our profit line is here and we sell one position, then our profit line is here. Okay. Everything below this gives us an opportunity to buy back the position that we sold at a cheaper price. However, if it goes up from here and we double up, well, there's our opportunity right there. Everything below this blue line gives us an opportunity to buy it back at a cheaper price. If again, we double up from here, that would be halving of that right there. This comes down, gives us profit below this line right here, because we sold at this, and then we're up here, we sold. Everything that we buy below this blue line right here is cheaper than what we sold it for. It's the same strategy in reverse. If you were doubling up here, then your profit line would go here. If you were doubling up, doubling up, doubling up, doubling up, okay? Tripling up, tripling up, tripling up, tripling up, quadrupling up, quadrupling up, quadrupling up, quadrupling up. Well, it's the same thing in reverse. If you mastered doubling up going down and tripling up going down and quadrupling up going down, you're doing exactly the same thing in reverse, except you're selling. Sell one position, sell 3 positions, sell 12 positions, sell 24 positions, 36 positions. As soon as you come back down, do your cost averaging in reverse. If you were able to cost average going down, now you're able to cost average going up. Now, work the strategy in reverse. How much are you going to sell? Well, if you were multiplying going up, divide how much you're going to sell going down. Work the strategy in reverse. If you've mastered going down with your right hand, now master going up with your left hand. It's exactly the same, just in the opposite direction. Now, if we know that what we're going to do is we're going to schedule our allocation all the way down here, and we're going to schedule our distribution all the way up here, once again, we can come into the market and we already have the money to do this with. We've already allocated every bit of our money according to the plan. We can take some percentage of our US dollars and go ahead and just put in these orders. If we know we're going to triple up here and triple up here and triple up here according to our plan, because this is where we want to be when the market does a dead cat bounce right here, we'll go ahead and put these orders in. If you know that tomorrow you want to wake up and you want to have sold out here and sold out here and sold out here and sold out here, and you've already made that plan, we'll go put those orders in the market. By planning the trade and trading the plan, you've made yourself profitable in your sleep. You've actually created your upside potential in either direction. Look at this. Look at this market. If this market does this, we're profitable. 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 There's no way to lose here. The only time that you don't make money is when the market goes sideways. So what could you do here? Well, if you know that this is where you want to get to and this is where you want to get to, could we allocate for that opportunity? Let's try. This is where we know we want to have sold out. $100% of our Bitcoins. And this is where we know we want to have bought 100% of our Bitcoins. If this is our 100% mark, and this is our 0% mark, and this is our 50% mark, well, surely this must be our 75% mark. And this must be our 25% mark. That's what we're really saying. Well, at the point at which we know exactly what our allocations are going to be at every specific level, we don't even have to do the math anymore in terms of doubling up, tripling up, quadrupling up, figuring out how much we're going to sell coming down. If we really do think that the market is going to sit here and move in this range of $5,000 to $2,000, there's our schedule right here. What we've done is we've scheduled our profit. We've scheduled our entire allocation. We've scheduled our entire distribution. And everywhere that the market goes on us, we'll make money on this. So here's the strategy. What we're going to do is we're going to hold some Bitcoin, and we're going to hold some US dollar tether or some alternative. Okay, doesn't have to be dollars. Could we do this if we wanted to in sorry, I'm getting this wrong. There we go. Could we do this if we wanted to in a different market? Well, yeah. Of course we could. Look at this. If we just draw our lines and figure out where our 50% line is, well, what's our allocation at this point? Is this our 68% allocation line? Is this our 45% allocation line? If we schedule this, we know exactly how much we're going to buy and exactly how much we're going to sell, no matter where the market goes. We know exactly how much money we're going to make. The only real question is, how long are you going to wait before buying and selling? And that's how much money you're going to make. Do you want to make 10% on your portfolio? Well, there's 10% right there. You found 10%. Here's what you need to do. You need to wait for it to move between this line and this line. And that's when you do your selling, and that's when you do your buying. And that's how you make 10% on your portfolio. Well, what if you're doing this across Bitcoin Ether, Bitcoin dollars, Neo BTC, Neo dollars? Okay, look at these markets. Could we move in these markets? Here's your opportunity. If you had scheduled this market, you would have just made 80% on this motion right here. You could have made 23%. Could have bought it all back 23% cheaper right down here. That stuff that you bought back cheaper for 23%, you could have made 36% on it. We're talking about doing this with a fraction of a portion of your portfolio. But if you don't think that 36% on a fraction of your portfolio, day after day after day, across every one of these opportunities, if you don't think that that's going to make you money long term, you're in the wrong markets. You're doing the wrong thing. You shouldn't be trading. At least not like a professional trader. You should be going to Vegas and gambling with your money. Can we find our market middle in this market and straddle this market? Go 50-50 around here? Do our 90% allocation? Well, we wouldn't have to do 90% allocation against all of our Bitcoins, would we? We could do 90% allocation down here against 1% of our Bitcoins. We could schedule this market right here against an allocation of our opportunity. Whatever our buying power is, whatever we want to allot for this market, whatever we want to say, this is what we want to put into this market, that's how much we want to spend, and that's how much money we want to make with it. Okay? You don't have to spend put it all into quantum. You don't have to take your entire Bitcoin and go buy half Bitcoin and half quantum. You can say, I'm going to take 1% of my allocation and allocate for quantum. And then I'm going to take my allocation of quantum and I'm going to figure out that this is how much I want to be, and this is my 70% line, this is my 80% line, this is my 90% line. Come all the way down here and find your 1 Satoshi line. There's your 100% line. If this market goes away, well, you scheduled 1% of your allocation to be right here of your entire portfolio. Could be making money right here. How much money are we making on every time the market wakes up and moves into one of our distribution or support lines? 17% right there. 12% right there. 10%. What about over here? Could we have bought things back 13% cheaper and then turned it around again for 18%? That's a lot of money right there. That's a lot of money right there. If you are not thinking about one position and scheduling your downside all the way down to here and scheduling your 1% allocation all the way down to here, you are absolutely stopping yourself out of 99 other opportunities. 99 other opportunities that you are not taking advantage of. The point of one position at the top of the market and scheduling your downside to be at 1% allocation at the bottom is to give you freedom. Is to give you the ability to make money no matter what happens. You started with one position up here, but then you realized that you're really one position here, 2x, 4x, 6x, 8x, however much you did. This is how much quantum you should have. At this point right here, according to your plan, according to your schedule. When it reaches here, we're going to look at our plan. We're going to say, well, according to this, I was 50-50 on my allocation. My allocation was 1% of my portfolio. My portfolio is 1 Bitcoin. Therefore, my allocation on this is, or my portfolio is 10 Bitcoins. Therefore, my allocation on this is 0.1 Bitcoins. Therefore, if I want to be at 0.1 Bitcoin and I'm starting at 0.0001 Bitcoin, I now have the ability to plan the entire trade. The entire trade just came together because I mastered one position, double up, triple up, quadruple up, 50-50, schedule, upside, downside, make all your money when the markets move on you. This is opportunity generation. This is scheduling your downside potential all the way down to 0 at 1% of your portfolio allocation. Even if this market goes away and becomes delisted, you walk away from 1% of your portfolio and you go and you make money in every other opportunity. Now, let's talk about how to really make money in these markets now that I've shown you how to make small change using 40%. You want to really become rich in these markets? Here's how you pull it off. Number 1. You follow this strategy and you plan every single trade down to 1%. You make your allocations tiny at the top so that you can figure out your 1% allocation of your entire portfolio all the way at the bottom so you can walk away from that, and then you do that in 99 markets. Number 2. You spend time in these markets and becoming familiar with how to analyze and correctly read these markets, and you become disciplined to selling at your schedule. Doesn't matter if you think it can go higher. If your plan has you selling at this level, you sell at this level, and you do it by putting the order into the market ahead of time. Number 3. When these opportunities present themselves, we've talked about ways to, number three is maximize your schedules, maximize your opportunities. We've seen how we can use support and resistance lines to find where these markets might turn around. On Friday, what we're going to do is we're going to study how to maximize those opportunities using more indicators, how to maximize those opportunities by creating more upside potential for us, how to bring in more additional information and create additional studies which will tell us if we're making the right, if we're really taking the most advantage. Maybe we could be skipping some of these buy-ins and making our schedule lower and not doing as much buying on the way down in order to take advantage of a lower price and then a smaller motion upward. This is just the beginning. If we don't master scheduling, if we don't master doubling down, if we don't master the 50-50 straddle, we can't move forward. We have to be able to plan the trade and trade the plan and stay disciplined to that. Now, let's say that this market goes up 10%. Let's say that we buy in one position here, and that equals 1 coin worth of quantum. I'm just going to use made-up numbers. It then goes up 10% right here. Let's say this is 10%. There's 10% right here. And according to your plan, you remain disciplined and you sell at 10%, even though the market has more up to go. One thing we did was we sold here, because we bought one position, we sold one position right here. If we had bought two positions, we might have used this as a divider going. If we had used this as a multiplier going down, we might have used this as a divider going up. Let's try a different strategy instead and see how it might change our strategy. Instead of using the divider strategy going up, let's use the trophy strategy instead. If I buy one coin at the bottom here, and that equals, if I buy one position at the bottom here, and that equals 1 coin, and then it goes up 10%. Well, I could sell 1 coin and make some money. Make some more Bitcoin if I bought it in Bitcoin. Make some more dollars if I bought it in dollars. Alternatively, I could sell, if I bought 1 coin, I could sell 0.9 coin, which is minus 10%. That would give me back all of the money that I had put into the market, and it would give me 0.1 coin as a trophy. Well, if the market then came down again, or if it went up and then it came down, and I bought one position, I could then go up and sell go up 10% and sell 0.9. This would give me 0.1 coin for free. If I did this 10 times, I would have gotten a whole quantum for free. If I sit here and I do that 100 times, I would have earned myself 10 free quantum. If I had 10 free quantum, and then quantum did one of these, that's 100% on my trophies. It's not about timing the market, it's about time in the market, because the more time that you spend in this market, the more trophies you can build in these markets. And then those trophies at zero cost opportunity to yourself. You can enter these markets at zero cost opportunity to yourself by taking trophies. And then, remember our diversification strategy? We'll take those trophies and put them into your diversification strategy. Put them into staking. Put them into wallets. Put them into hashing contracts. Put them into a safety deposit box. Put them into a trust. Put them into your will. Put them into anything that long term will make you better prepared for this upside potential. It cost you nothing to do. Absolutely nothing. It was free to get into these markets and then make a ton of money. 100%, 200%, 500%. You're sitting here doing it back here. You're making a bunch of trophies for yourself. Trophy, trophy, trophy. Trophies all day long. You spent no Bitcoin getting into Neo. None whatsoever. You figured out your allocation. You figured out your upside potential that you wanted to be in. You were sitting here doing in between this motion and this motion right here, going, I'm making a ton of money, going up and down, up and down, up and down, making trophies at zero cost opportunity to yourself. Then your trophies do 420%. Literally over a 2-week period. You want to make a lot of money? Spend time in the market. It's about market intelligence. It's about business intelligence. It's about taking those trophies. It's about creating those no-loss opportunities for yourself and then walking away with free money and then turning that free money into 500% more free money. And that's how you make all your money in this market. It isn't about these little itty-bitty wins right here. These little itty-bitty wins are what enable you long-term. You eat your meal one bite at a time. It will make you full. You don't take the whole thing and shove it in your mouth. One position will keep you in this market long term, and it will make you a ton of cash long term if you start planning the trade and trading the plan. And that is the way of the trader. Thank you very much.